Hello and welcome. You're watching us here on CNBC-TV18 HDFC Sky Election Headquarters. We're talking about all things election. One of the beneficiaries of the outcome of the election have been FMCG stocks. In fact, over the last two trading sessions itself, the FMCG sector has seen a big move. The FMCG index is up around 4% today. And if you look at it, in the last 2 days itself, it's seen a gain of almost 8.5%, taking its monthly gains to 6%, making it the best monthly performing index for the month so far, which has seen just about 3 trading sessions. The reason for that, there are 6 of them, and the most important one in terms of a trigger came in just yesterday. The election results outcome, focus on rural shops, support and flight to safety, all of that helping. That's the value plus that we're talking about in FMCG. Goldman Sachs has raised their staples weight on likely rural support. MK has suggested a swift switch from PSUs and capital goods into FMCG. Jefferies has said they're overweight private banks, consumer staples, auto OEMs. So consumer staples is now suddenly finding its way into brokerage recommendations. HDFC, for instance, as well, is clubbing consumer staples with IT and pharma as they look reasonably valued. And irrespective of this trigger, the underlying fundamentals of FMCG had started to turn in the fourth quarter itself, where there were green shoots of rural recovery, as pointed out by the managements of HUL. Dabur said their rural business grew 2 times urban. Britannia said good monsoon, contained inflation bodes well for rural recovery. And Marico too expected rural recovery in FY25. And on the back of this, these companies had started projecting for double-digit growth. And that was a welcome change in a sector which was parched for growth over the last couple of years. So Dabur is targeting high single-digit volume growth with double-digit revenue growth. Britannia gunning for top-line growth in FY25, which is double-digit. And Marico too expecting double-digit revenue growth in FY25. Amidst all of this, inflation was contained. So margin improvement that these companies had made over the last 1 year or so is expected to sustain because RM pressures or raw material pressures have abated, and ad spends that these companies had to take, they had taken it already. So they've been ramped up, no further delta coming in out there. And underlying all of this, the urban consumption has not abated either. So the premiumization trend continues, where HUL, Britannia, Marico, all of them saw premium products do a lot better than the average portfolio of the company as well. Clubbed with all of this was a lot of underperformance in the space that we saw. The last 12 months should show you, the FMCG index was up just 14%. And this includes the 2 days of gains that we saw in the last couple of days. BSE cap goods up 63%, whereas the PSE index was up 90%, telling you that, the FMCG stocks hadn't participated in the rally that we've seen. Some of these stocks were actually at levels that we saw last in 2019 and 2020 itself. And even if you take a look at the gain that we saw on HUL in the last 2 trading sessions, adjust for that, the stock is up just 1% in the last 12 months. And the others are also underperforming the Nifty and the Nifty FMCG index. So all of this put together led to a big rally in the FMCG stocks. The question is whether it sustains or not, and at what point do we see growth actually come by. With that, we'll take a short break. On the other side, we speak about all things commodities, focus on the agri space, foods, etc. Manisha joins in with the president at Indian Chambers of Food and Agriculture. Stay tuned.